Mark Mobius, Executive Chairman at Templeton Emerging Markets Group, him in conversation with Tanveer. Let's cut across live right across to it.
Find some common ground when it comes to deciding on compensation that says that they're looking at for ultra luxury and demerit goods, plus the 4-tier tax structure. The sound bites that you're getting as of now, doesn't that convince you that they could perhaps 11th hour, 59th minute make it?
No, I don't think that's possible because there's so many different forces at work that you can't expect a clean, immediate implementation of this system.
So what would be a reasonable timeline to your mind?
I think at the end of next year.
End of next year?
Yeah.
So it'd get pushed back by like 8-9 months, you expect?
For complete implementation.
Okay.
Now, of course, in the meantime, there will be incremental changes taking place, which will be very beneficial. But I think to be realistic, we have to think longer term. Now, I'd be happy to be surprised. It would be wonderful if they're able to do it before that. But I think it'll be a little longer than we expect.
The reason I ask you this is because you had told me that with the GST passage, you would look at doubling your India investments. Even in your last interview with me about a month back, you said that your allocation, India allocation, stands at 7.5-8%. The EM fund could go up to 14%, even 20% plus. So when would you start, increasing your allocations? What would you want to see to make that decision?
Well, you see, a lot will depend on what happens to pricing of the securities. When I say that, I don't mean just this absolute stock price, but also the earnings. If earnings surge, then we can justify doubling, tripling our allocation. And of course, when we talk about GST, we talk about what impact that has on the earnings of the companies. So I think we have to be flexible and look at each company on an individual basis and determine, what their earnings are going to be and what impact the GST is going to have on those earnings. In some cases, it'll be as much as 10% increase in earnings, and that could be very significant.
Yeah, I want to talk about that because even S&P has put out a note that if GST goes through as per plan, then India's potential of 8% plus would very much come to the fore. Do you agree with that?
Absolutely, I agree. Yes.
Yeah.
Full implementation.
Full implementation. So
this is very important.
So that you only foresee coming through from FY19 onwards.
Yes, exactly.
What would that do for corporate earnings? Because you're foreseeing 12 to 15% earnings growth for FY17. That's what you mentioned is your broad expectation. With the GST coming into place, how much of that would get revised higher? Where would the earnings range move up to?
There'll be an incredible increase in earnings for many companies, as much as 20% you'll see in some cases. Now, when I mention that, what I have to emphasize is that with the GST, you now have a bigger market for many companies.
That's true.
So you're going to have consolidation of firms throughout the country, and you're going to have the growth of huge conglomerates, huge companies that will be world-class and will be able to expand internationally at a much faster pace. So it's very important to emphasize that the consumer market in India is enormous, but it is now divided. It's segmented. With the GST, you'll see a combining of these forces so that you then have the rise of really huge consumer products companies, consumer services companies, etc. It can be very exciting.
So give me a range in that. I mean, how high could earnings growth go up by?
In the next 3 or 4 years, you can see 20, 30, 40% increase in earnings with the proper GST implementation.
Right. And again, a derivative of that would be what that does for market valuations. Again, you highlighted, and I was quite startled when you said, 20, 25 times PE expansion, valuation expansion is very much on the cards. We're at about 17 times 1 year forward. That would mean a 50% strong rally from here.
Yes.
41,000 target for the Sensex, 13,000 nearly for the Nifty. All of it really rests on GST. What else can really take the markets higher?
No, there are a combination of factors here.
Yeah.
There's GST, but there's also interest rates. Don't forget, with very benign inflation, then you're going to see lower interest rates, which is meaning that you can justify higher PEs. So there's a combination of things. There's GST, impact on earnings growth, lower interest rates,
cost of capital coming down.
All of these things combining to give an incredible push to stock prices.
Right, and how soon do you think that we would embark on that mighty rally? We are pretty much still trying to tease around the all-time highs. When do we go past that?
Middle of next year probably, because by that time the GST impact will really begin to feed into the system, provided that everything goes the way we expect it to go.
Are you saying that by August of next year we would be at 13,000 on the index on the Nifty?
It's quite possible.
Quite
yes,
possible.
Quite
Okay.
possible.